Hello, this is Mark, and today we have a video about my profits in Jade Lizard strategies on the XLF ETF Basket, or actually how to make money if the market is moving against you. So have fun and take a look. What you see here is a 1 month chart of the XLF ETF financial basket, and you can see there are some movements because now I do that for 1 month. So here we have been at 32.16, it went down to 31.75, and currently actually we are 33.50. So we have some movements in this ETF, financial ETF. The idea is to sell options with a 40% or below delta. If you know, a Jade Lizard is nothing else than to sell a put and actually including a call spread. So I sell a call and I buy a call. I always work with two Jade Lizards with different expirations. The volatility was actually, I have to say, was 19 to 21. At the moment it's just about 15, so it came down. It represents no big moves, no big premiums. Well, this is the idea of doing a Jade Lizard, is because always that I don't want that they are skyrocketed of 10 or 15% up and down. It's more that the range should be around 3 to 4%, which I can really work on it. But the premium, what we get is not that much. But this is what we can see now in the next slides. You can see initially I did on the 8th of May this Jade Lizard, as you see, sell to open, here the call to open and call buy to open, and I get a 41 credit. And this one was working very well because on the 18th, you see 10 days later, the XLF stayed in the range of 32 or 33. So I simply closed the position 1 day ahead of it at 2 debit. Okay, you could tell me now I would not need to close it because actually that would be expire worthless, but just on the side that that if anything could happen, I did this, so I don't pay any commission on the closing side. So in other words, I had a credit, debit, and here the net credit is 36 because I include this $3 commission, more or less $1 per option of commission. So that one did fine. 1 week later, I take the May 26, and you see the initial was again here. You can see I dropped a bit lower the strikes because the underlying was a bit lower. So I did a range of 31.5 to 32.5, and again it was perfect. I get 43. I paid one. Actually, here again, I just paid one side. This is the put side. The call side was worthless, and I get a kind of net credit of 38 with a $3 commission which I paid here. So far so good, huh? Next Jade Lizard, well, things get a bit more complicated. You see here again, initially on the 18th of May, I did again this kind of narrow, I have to say a really narrow spread, because you see I do 32.5, 33, 33.5, which actually pass me a credit of 65, which is fine. And then already on the 1st of June, which you can see here, I could close already the call. Well, I closed the 33 because I open up right away, or you can see 1 day later, I open up right away a new call spread. Why? It's because the underlying just went down. So these 33 and a half were worthless. So I said to myself, okay, then I will right away open up a new call spread. So in other words, I just put the strikes down in the call spread and getting another credit of 21. But as I said, sometimes maybe I should not do that, because what happened now in the meantime, that the XLF get out of this range of this 32, 33, which I have here, it went over 33. So in other words, I could maybe close the put side here at 6 and actually the call side here at 6, but then at the end I had to cover the call side, the call spread with 34, because what happened is that the underlying went over 33. So I said to myself, I close it on the 6th of June rather than on the 9th of June, because on the 9th of June I would have to pay 50, but on the 6th, since it was still about time left, and again the index was maybe about 33, 33.20, I pay less than what could be the maximum loss. So at the end it results a profit of 0.43, and again $5 commission. This is the initial plus the spread. And all the other thing is no commission, because you pay only whenever you open up the position. So on the 4th Jade Lizard I did with the 16th of June, which just was yesterday. You can see initially I opened that, and I get a 60 credit, which is nice. And on the 6th of June you can see here I already could close the put option, the 31.5, because the market went up. And then what I did, I said to myself, well, now the market is already over 33. Let's sell a 33 put. So I closed the 31.5, but I open a new position 33 put in order to get 32 credit. I did that is because the market tends to go up, and you see here I have the 32 and 33. So in other words, if it closes above 33, I probably will anyway have to pay this 50. So I go a bit aggressive into the market and say to myself, okay, then I sell a 33 put for 32, because if the market goes over 33, at least this put would expire worthless. And this is what is going to happen, is that I get 60 credit, 32, but you can see here, because the XLF was trading above 33, I think it closed at 33.20, 33.50. Well, I have to close this position, and here again I close it on the 9th of June instead of the 16th of June, and I had to pay 39, right? So in other words, this I close upfront because I thought to myself, well, now the market is too strong. I hardly believe that the market will come down again to 32.5 or even lower, and it was exactly what happened. It was 33.50. So whatever I paid here, it was almost compensated by the put, by the selling of the put. So here you can see that if I would keep the position like that, I would not act at all. Okay, I would have to have a 60 credit, but here I would have a 50 debit if I wouldn't do anything, so I would have slightly a small profit. But you see now it results a profit of 0.39, just because I did a kind of well, we can say an emergency. I did just a transaction because I see that the market is moving up. Let's make the summary of this 4 Jade Lizard within 1 month. You can see the profit here is added. So my full profit is 1.56, so let's say $156 on one option. Let's say if you would do the same everything on one option, you would get 156 profit. The buying power effect here, but let's say the margin for the 2 Jade Lizard would be just 1,500. So in other words, you just need 1,500 as a deposit, as a margin, in order to achieve this profit. Originally, the risk capital would be 6,400. This is nothing else than the downside put. Let's say the 2 puts at 32, which actually I sold. Well, if I would be exercised, well, then I would have to have this 6,400. But again, probably no one will do it because there's the way of roll over the put option. So in other words, you may really live with this 1,500 buying power as long as you roll over the position and don't get exercised. So the return on investment, as on the real investment, would be 2.4375. But if you want to calculate the return on investment as a margin, well, then things looks very nice, then it's like you have a 10% return if you would see it like that. So Jade Lizard is certainly something for sideways movements of the underlying. I always say that an ETF on financial probably doesn't move that much up or down. Okay, there was the banking crisis, which seems to be over. That is why now the index is coming up, but I think it's a good thing. The call spread, which are in the money, as we have seen in the last two Jade Lizard, could be closed or should be closed before expiration, because when you see that both options are in the money, you better close it, because the full loss you would really have on expiration day. So better close it before and maybe take the loss and say to yourself, okay, better open up a new one, maybe with a new strike. The rollover of the put option I always would recommend. I mean, if the put option is in the money, then you just simply roll it over. Here again, for the sake that you don't have to deposit the full capital, you just have to deposit the buying power. And in that case, you roll over the put into the next week or into the next 2 weeks, no problem. And here is the next thing is, if once you have done the rollover of the put option, well, then you're going to choose a call vertical spread or a call spread to add to the put option to create again a Jade Lizard. And I think this is what I do is, once I did the rollover, okay, I watch the market and then I add a call spread. So then you have again a Jade Lizard. So this is more or less the whole strategy, how I have proceeded. The video of the profits in Jade Lizard on XLF. I do Jade Lizard not only on XLF, I do it on the bond, short-term bond like the TLT. I used to do it on oil. I used to do on gold. Basically, I would recommend you to do that more on shares ETF. Let's say it could be a healthcare basket, it could be an information IT basket or whatsoever, an ETF in where you can see the volatility is around maybe 19 to 20 or whatever. Anyway, volatility is coming down more and more, so it's a bit more difficult to find. But as I said, this is a kind of passive income. It's not that you really make a lot of money out of it, but it's something really you can do, and then maybe you have to watch it maybe twice a week. It's not like a day trading. It's just something you can look, and it really works. I mean, you have seen it that every Jade Lizard so far I have done, it works out. Just that sometimes maybe you need some adjustment, and at least you can get a small profit out of it. And I think this is really what I would recommend if you really want to get into the market, into option market. Jade Lizard is certainly a nice thing. Okay, that's all for today. I hope you had some fun, and we see us next time. Bye bye.